Good afternoon, everyone, and welcome to today's informational webinar on the Value Line Daily Options Survey. Again, my name is Brian Fong, and I'm one of the Senior Equity Research Analysts here at Value Line. I'm also one of the representatives of the options team. With the pandemic still causing some challenges and disruptions, I'd just like to comment on how happy we are to host this event for you today. And I'd like to start by thanking our longtime subscribers to the Value Line Options Survey and welcoming those of you who are new to the service or are considering a subscription. Now, before I jump into the heart of the presentation, for those of you who might be joining us for the first time, I'd just like to provide an overview of who we are here at Value Line. Value Line is an investment research corporation headquartered in New York, and we've been providing information to our subscribers for more than 85 years. Our flagship product is the Value Line Investment Survey, which is a unique service that provides financial information designed to help investors make informed decisions that fit any number of different individual goals at various levels of risk. The product includes data, information, and analysis on about 1,700 equities that trade on the New York, NASDAQ, and Toronto stock exchanges. It also includes economic commentary, easy-to-follow model portfolios, stock screens, industry-based analysis, and a lot more. The investment service is created by Value Line's research department, which is comprised of more than 70 analysts, economists, data experts, and quantitative specialists. And our research, which is published weekly, is completely unbiased and independent. Unlike a lot of other Wall Street brokerage firms, Value Line has no investment banking business with any of the companies, including the 1,700 that are listed in the service. Value Line also does not execute trades for its subscribers, and so we have no vested interest in whether or not our subscribers buy, sell, or hold any specific equity. Also, it's worth noting that none of our staff of professional security analysts are permitted to own shares of any company that they cover. Now, with that being said, today's presentation is going to focus on the Value Line Daily Options Survey product, which is a service that's designed to help our subscribers identify attractive option investments, and it's been part of the Value Line family of products for more than 20 years. On today's call, we're going to go over the basic outline of the Value Line Options Survey, including the reports that we administer on a weekly basis. We're also going to show you the instructional tools that can be found on our website, and we're going to be taking an in-depth look at our screener, where we'll run a few screens and show you just how useful and flexible this product can be. Throughout the presentation, please feel free to ask questions in the Q&A box that's provided by WebEx. And at the end, we'll try to get to as many as we can. If we're unable to answer your questions today, we ask that you forward your inquiries to the options team at vloptions@valueline.com, and we'll do our best to get back to you as quickly as possible. Purchasing or selling options can be a great way to improve your portfolio. They allow investors to take positions in a given equity at a relatively low cost, and they are flexible, presenting you with the opportunity to adjust your existing equity position to augment your risk and return profile. Options even have the potential to provide superior returns through leverage or by boosting current income. And so we think it's important for strategic investors to have a good working knowledge of options so that they can incorporate them into their respective portfolios. The Value Line Weekly Options Survey provides information and ranks on all regularly listed options. With some variability, this typically includes more than 600,000 options on more than 2,900 stocks and closed-end funds. To try and ensure that you have the ability to take advantage of any trading opportunities as they arise, our model is constructed so that it's updated on an hourly basis over the course of the trading day. In order to access the option survey, simply head to valueline.com and sign in with your username and password. Then from the welcome screen, you click on options. Located at the top of the options homepage, you can see our navigational tabs titled Commentary, Screener, Survey Issues, and Resources. The Commentary tab is what you're viewing now, and it's essentially our options homepage. It highlights all the recent editorial content that's been posted to the survey. And upon scrolling down the page, you can see most of the articles that have been added here over the past week and a half. At the bottom of the page, you can also select any of the given page numbers, and this will allow you to preview past articles that have been posted all the way back to the survey's inception. Every Monday on this page, you'll find our Common Rank Changes Report. On Tuesdays, it will display our most recent weekly option screen report, as well as a second article that features an option strategy on an individual stock. On Wednesdays, we release our weekly option rank performance page, and on Thursdays, we have our weekly strategist report. The Common Rank Changes report highlights those stocks that have had their common rank changes over the past week that also have attractive options for any of the 4 primary option strategies. On the site, you can see a few examples of these stocks. Then, upon opening the PDF, you can see the full article, which reveals all of the stocks that meet these criteria grouped separately into the 4 primary option strategies. Back on the website, we include a list of featured screens that we use to filter the options, and if you're interested, you can save these screens for later use. Moving on to our weekly screen article, this article takes a snapshot in time of the results for a particular strategy that the analyst has deemed attractive, given the current market fundamentals, as well as any pertinent geopolitical or macroeconomic factors. This particular report deals with attractive covered calls, and it features a short explanation of the current economic backdrop and why it's conducive to the option strategy that's been selected by the analyst. Like the Common Rank Change article, you can get a fairly in-depth preview on the Value Line website. Then in the attached PDF, you can view a table of the specific screen criteria that was used to generate these results. In this screen, the analyst was seeking out attractive call rights with a delta between 25 and 45 that offers a minimum amount of protection of 5%. They've set a cap on the potential bid-ask spread at 15%, and they're looking for positions that are less than 15% overpriced. Taking these screening criteria into consideration, you can see all the results that were generated by taking a look at the table at the bottom of the page. You know, we're going to show you a few more details on the ins and outs of the screener later on. But for now, we're going to continue with a background on our weekly reports so you know exactly what you can expect from us on a weekly basis. The second of the 2 articles are typically disseminated on Tuesdays, is the option strategy on an individual stock. And in this article, we highlight a particular company, discuss its profile as a business, and highlight some of the specific information like its recent earnings performance and how its stock price has been performing of late. This particular report takes a look at GoDaddy Incorporated. It's a covered call report, and you can see it features all of the company and stock specific information that we discuss. And if we scroll down to the bottom of the page, we can see specific option suggestions that have been made by the analyst in the designated box. Now in these boxes, call options will appear with an orange header and put options will appear with a green header. Looking here, you can find many of the more pertinent facts about the option. Usually for your convenience, the analyst will take some of the key statistics from these boxes and highlight them in the article. In this particular case, we've noted that the strike price on the option is $80 and it expires on May 20th, 2022. The position is presently about 8% out of the money, and the premium received upon writing the call offers protection of more than 6%. Protection represents the amount the underlying stock can fall in price at expiration before the writer starts to lose money. Moving on, we can show you our weekly option rank performance article. This article comes out on every Wednesday, and it shows the compiled weekly performance of all options that exist within the Value Line universe that have also been identified by our screener as having attractive characteristics for the primary option strategies. In other words, it will display all of the call ranks with call buys with a rank of 1, all of the call rights with a rank of 5, and so on. The performance metrics that appear here are calculated using the closing prices from Tuesday through Tuesday of the following week. And as you can see on the PDF, it gives a comprehensive breakdown of how each of these strategies performed on an individual basis. On the right-hand side of the page, the PDF also provides the performance of our market-neutral hedges. These are combined strategies that, when put together, create a synthetic position. It's important to be aware of the fact, however, that this article is really meant to highlight the strength of the option ranking system above all else. We say that because given the sheer volume involved in calculating some of these performance metrics, as you can see, many feature upwards of tens or even hundreds of thousands of options. It's not exactly practical to replicate the portfolio. With that said, the weekly option rank performance article still highlights the quality of our ranking system and how it can be used to help you build your portfolio of options. Now, for the last of the weekly articles, we'll provide you with a brief synopsis of the weekly Strategist report. This report comes out on Thursdays, and it's typically a bit more in-depth and educational in nature than some of our other reports that we release throughout the week. We found that utilizing this format helps to explain more of the nuanced elements of the option survey. But these reports also range from strategic topics like hedging your portfolio with options and protecting your assets with options to more entry-level information targeted at our newer subscribers like navigating our website, and the refresher course on our screener. This week's article, A Dictionary of Option Strategies, gives a brief introduction to numerous option strategies in an effort to help you determine which direction may represent a better fit for your specific risk and reward profile. I think all of these weekly articles can be helpful in keeping you up to date on highly ranked options, giving you examples of how we, the analysts, use these tools to generate screens and select potential option positions, and providing you with educational and strategic information that can help you become a more well-rounded investor. Clicking on any of these reports that we've highlighted will also typically lead you to a series of relevant and helpful links and attachments. Now, apart from the articles that the option survey offers, if we move on to the next tab, the top of the home screen, you'll see our option screener. The screener is an extremely customizable tool that operates using updates that take place on an hourly basis based on prices starting at 10 a.m. and running through the end of the day at the market close at 4 p.m. For newer users, and to make it a little easier to filter results, it caps off the number of options that you're able to select and download to 1,000. But if you'd prefer an unlimited quantity of options, we also offer an expanded screener, which is located under the Resources tab. We find that tool is typically more useful to experienced investors who are familiar with downloading data and incorporating it into Excel spreadsheets for additional filtering. But as for this screener, you can see by scrolling down the page that it also offers a lot of specs that can help you customize your search. At the halfway point, the first metric that we'd like to show is the section titled Ranks. This section is probably the most important if you want to harness our proprietary ranking system. The option ranking system that we provide is based on two items. First is the timeliness rank of the underlying stock. The timeliness ranking system is scaled from 1 to 5, with 1 representing the highest rank and 5 representing the lowest. So stocks that possess favorable timeliness ranks of a 1 or 2 are more likely to be highly rated for bullish option strategies like call buying, covered call writing, and put writing, while stocks that feature unfavorable timeliness ranks of 4 or 5 are more likely to have options that are suitable for bearish strategies like put buying and naked call writing. After taking into account the timeliness rank, our system also determines whether an option appears undervalued or overvalued based on our model's adjusted volatility forecast. When you put these statistics together, for example, we can say that an option that appears to be undervalued and is based on a stock with a timeliness rank of 1 is an option that is likely to hold a top option rank for call buying. We'll come back to the rank section in just a moment. But for now, if we scroll back to the top of the page, we can show you one of the other more general ways the screener will let you refine your search. Here, under Basic Information, you can simply type in the name of an individual company or index, and it will allow you to search for all options that are available. You can also search here by entering a single ticker or a series of tickers into the designated box. So, for example, we're going to type in the tickers for Apple, AAPL, and Foot Locker, FL. And upon completing the search, you can see that we found in excess of 1,000 results. Now, this makes sense, as we haven't yet filtered out any specific metrics associated with these stocks. But you can do so by heading back to the screener page and making a few adjustments. Let's say you want to conduct a search for these same two stocks, but we're only interested in looking at call options, or we only want put options specifically. From the screener, we can make these selections from the list of preset screens. This will allow us to refine the search in that way. You can also scroll down to the bottom of the page and select Click here to edit display options. When the pop-up appears, you can use the drop-down arrow at the bottom of the page to adjust the number of options that are displayed in our results for each of the selected stocks or indexes. Now, if you as an investor aren't targeting any individual equity specifically, you could leave most of the page untouched and just use the preset screen box on its own. This will allow you to choose from the 11 different preset screen options that are shown, including highly ranked stocks that exist in our VLIS 1700 and VLIS small and mid-cap surveys, as well as call options, put options, leaps, which are longer-term options, or any of our recommended option screens. To the left, the box marked industry will allow you to select an industry or any number of different industries in which you might like to conduct a search. You can also pair these two search criteria together if you're seeking specific strategies to pursue in a given sector. So for another example, let's just say we add no data to the screener, and we just go ahead and select naked call buying from the list of preset screens. We edit our display options and set our results to show only one option per underlying stock. And then, upon conducting a search, we can see that the screener has yielded 49 results. This includes companies like Micron Technology and Apollo Global Management. Then if you go back to the screener and scroll a bit further down the page, you can go back to our 8 rank selectors. These will harness our option ranking system to give you option positions based on the selected criteria. For call and put buying, as well as covered call writing and married put buying, options are ranked from 1 to 3, with 1 being a buy or a write, 2 being a hold, and 3 being a rank that signals when to close out the position. On the other hand, for naked call and put writes, options are ranked from 5 to 3, with 5 being a write, 4 being a hold, and 3 being a close. Clicking multiple boxes in any given row can broaden the number of options that meet your criteria, and clicking boxes in different rows will allow the screener to combine common ranks and technical ranks with highly ranked option trades. You can also refine your screens using the additional option information segment of the page. Here, the drop-down arrow shows you more than 45 different criteria for your search, including bid-ask spreads, expiration dates, and percentages in or out of the money. These fields are separated into 5 divisions that focus on covered criteria, information about the underlying stock, margin specifics, the option itself, and the investor's risk tolerances. Also, before you proceed to submit a search, you can click the Edit Display Options link at the bottom of the page that we used earlier to edit the metrics that will be displayed when your results appear. From here, you can simply add or remove columns by highlighting a column criteria and clicking the left or right arrows that separate the boxes titled Available Columns and Displayed Columns. Then at the bottom of the page, you can also sort your results in advance of the search or designate the number of options that you want displayed for each individual stock or index. Don't forget to save your display options before clicking OK and closing the box. Putting it all together, for the screener, you might find it a little tedious to repeatedly open the page, select the ranks and strategies that you want, and continue to add even more data into the available fields as you scroll down the page. But if you head back to the top, you'll notice that we offer you the opportunity to save screens. This will allow you to seamlessly access them for later and repeated use, or continue working on them if you started creating a screen but have not yet finished. Once the screen has been saved, simply click Choose File, select the screen, and then click Open to bring it up once again. Moving on to other tools that the Options product offers, if you turn your attention to the left-hand side of the page, you'll find a link to our list of recommended options. This part of the website features lists of highly ranked options for each of the 6 basic strategies, including call buying, naked call writing, covered call writing, married put buying, naked put buying, and naked put writing. These recommended options are typically beneficial to our newer subscribers because they can help create a working knowledge of the primary option strategies while also offering companies that might seem attractive for option investing. By selecting any of the given option strategies from the drop-down menu and clicking Search, you'll be presented with our top 200 picks for each of these strategies. This program limits the number of options per underlying stock to a maximum of 5 to make sure that you're given a more diverse assortment of selections. Notably, however, one limitation of the recommended options list, and the reason we say it's really more useful to our newer subscribers, is that it does not take into account any of the investment considerations that are specific to you. These options are highly ranked, but if you wanted to search for highly ranked covered call options that are specifically at least 5% out of the money and expire within the next 30 days, you would have to input that data into our standard screener in order to retrieve those results. Now, with that in mind, we always encourage you to delve deeper into potential investment positions that you've been able to highlight using our screener, just to make sure that the company-specific information that you found matches up with your investment thesis and general suitability. We're going to come back to the screener in just a minute, for a bit more of an in-depth explanation, but for now, we just want to take a moment to touch on the remaining tabs that are available under the options homepage. First is the Survey Issues tab, where you can find our past weekly Strategist reports archived here for educational use. Oftentimes, these reports will highlight a particular investment strategy and dive a bit deeper into its application. These articles can also help you understand what tools the Value Line Option Survey offers, like the screener, how they're used, and how they can be better employed to harness a particular option strategy. Similarly, a lot of our educational offerings can be found under the Resources tab. Most of these links have been long-standing features of the options product, but the educational how-to guides at the top of the list is probably your most useful source of information on how to use the option survey and the various option strategies. It contains a glossary for reference if you're having trouble determining what certain values mean or what acronyms in your results might stand for. It also offers a guide that's titled How to Invest with Options, which contains a number of examples and visuals that can help you better recognize opportunistic investments. Back on the resources page, you can see things like options by stock ticker, which gives you the full option chain of any stock or closed-end fund that you enter. We also have the expanded screener, which we discussed before, and we offer some downloadable Excel software as well. We really want to make sure that you're able to harness these tools to help increase your portfolio's returns when markets are relatively calm and relieve volatility when the levels of uncertainty are high. So to round this all out, we're going to bring you back to our screener page and put the product into action a bit to show you just how useful it can be. And for some of our newer or potential users, we're going to try and give you some level of comfort by making sure you can decipher what you're looking at when you finally retrieve your results. Now, typically, we find that a lot of our subscribers gravitate towards writing covered calls. For those of you that are completely new to options, the covered call strategy consists of purchasing the underlying stock or maintaining an existing position in a particular equity, and then writing covered calls on that same security. The strategy allows you to boost the yield on your overall position during times when upside potential may be limited, or even when you just have a basket of stocks that you're holding and want to maintain, but still want to use your position to generate immediate income. In the screen we're loading up for you now, we're looking for rank 1 covered call rights that are based on stocks that have a common rank of 1 or 2. We're going to set our display options to account for one result per underlying stock. And then under the additional option information section, we're specifying that we're looking for a delta with a minimum of 20 and a maximum of 45. We do this to help make sure that there are no options too far in or too deep out of the money. We're also going to add specifications for options that provide protection of at least 2% and a dividend yield of at least 1.5%. So if we implement all of these criteria and proceed to run the search, you can see that the screener generates 49 option results. 74 option results, just updated. And if we're continuing to play around with these figures and inputs, you can see how even modest changes in any one given metric can have a fairly strong impact on the output that you're given. So with that said, we're going to go ahead and go back to the screener and introduce a minimum value for the expiration date. In this instance, we'll say about 6 months out, which will be roughly June 1st of 2022. Then, when we run the screen again, we can see that now we're ending up with, just a moment, 51 results. So clearly the screener can be highly sensitive to the adjustment of inputs, but it's also highly customizable, so you can search broadly or get very granular to find the options that work well with all different specific strategies. And again, because building accurate screens that meet your preferences may take some tweaking here and there, you can always save your screens for repeated use or come back to make changes to them later. Now that we have our condensed list of options, which meet our parameters for covered calls, that have deltas between 20 and 45, offering 2% protection and a 1.5% dividend and expire no earlier than June 1st of 2022, you can choose one option from the list of the results. In this instance, we're looking at Harley Davidson. We then proceed to just tick the box to the left-hand side of the option on the list, head back to the top of the page to view the profile. Here, you'll see a familiar box that will show you some of the relevant data pertaining to the individual option. Here we can see we're looking at Harley Davidson. This particular call expires on January 20th of 2023. It's got a strike price of 45 and a per annum yield on the position of 10.7%. And that assumes that you're writing another call after this one's already more than a year out, so it wouldn't be as big of an issue. But if you're looking at, say, a 6-month duration call, you'd have to write 2 6-month ones to get that full per annum yield. Some of our more experienced traders will understand this as rolling the call. Now, if we turn our attention to the Harley Davidson report in the Value Line Investment Survey, you can see that the commentary largely confirms our outlook, displays a stock with an average safety rank of 3, which also offers solid risk-adjusted total return potential. The earnings appreciation is expected to be substantial this year, and the company continues to pay a dividend that exceeds the 1.5% minimum that we highlighted in our screen. Now, it's important to remember that not every screen is going to generate results. It is possible that you can get too specific in your screening criteria, and you can inadvertently eliminate all possibilities. The screener might also yield 0 results when looking for a particular option strategy or a specific company if the stock just doesn't have any attractive options that match up with that particular strategy at a given point in time. In that instance, we suggest that you check back later or widen your search criteria, and that might help you retrieve some results that are at least close to the criteria you were looking for. We think this level of variability is actually one of the primary benefits of the screener process, because it allows the product to cater to pretty much any investment preferences that you might have. That's also one of the reasons why we have our weekly posts, so we can highlight how the screener and the weekly option strategist can be utilized to meet your preferences, whoever you may be. Now, before we conclude the presentation, we'd like to take this opportunity to show you just one more screening strategy that we think can be useful. We've displayed how to generate immediate income on an equity position using a covered call. But what if you wanted to limit the amount of downside risk that you're taking on by holding a particular equity? In this case, you could choose to implement a married put strategy where you'd maintain your existing position in the underlying stock and then proceed to purchase an at-the-money or out-of-the-money put option to create a floor should the equity's value fall. Those of you that are new to option trading can view this as similar to purchasing insurance, where even if the stock continues to appreciate in value, you only increase your break-even point by the value that it costs you to purchase the option. Harnessing the married put strategy requires existing holdings, and so for our example, we're going to pretend we currently have a position in Rite Aid. Ticker is RAD. RAD is a stock that currently carries a common rank of 5, so it might be a suitable selection for put buying. In our screen, we're going to use the stock ticker box that we highlighted before to enter the ticker RAD. Then we're going to use the preset screen box to highlight that we want puts only. Moving down the page, we're going to tick the number 1 next to naked put buyers in the rank section. This will ensure that we only retrieve the highest ranked put options on RAD stock. Finally, we're going to go back into our display options, and we're going to use the drop-down arrow at the bottom of the page to make sure that the screener displays all of the options that are available to us. We save and then proceed to conduct the search. From here, you can see it's generated 97 options that are available with varying strike prices, expiration dates, and costs, depending on the distance in or out of the money, as well as other variables. Now, upon selecting an option and proceeding to hit the view profile at the top of the screen, we can see the various statistics associated with the option, much as the other ones that we discussed earlier. As you can see, introducing statistical data into your search and finding options that suit the strategy you want to pursue is a fairly straightforward process. And with that, we're going to conclude this presentation on the Value Line Daily Option Survey. For anyone who would like, we can email you our preset screening data and display criteria for the covered call screen that we highlighted today. This will allow you to load them into the screener anytime you want and generate results based on the most up-to-date option pricing information. We also offer preset screen files for all of our primary option strategies. If you want, you can start off with these as base screens and then make adjustments like we did in in this example, to tailor them to your own preferences. This video will also be made available on ValueLine's YouTube channel within 24 to 48 hours. But for now, I'm going to turn the call over to one of our other senior analysts and representatives of the options team here at ValueLine, Jeff Hurt, who's going to be able to answer some of the questions that you've posted throughout this webinar. We really hope you've enjoyed this introduction to the ValueLine Options Survey. And once again, if there's any questions that we're unable to answer, we welcome them at vloptions@valueline.com, and we'll do our best to make sure we get back to you as soon as possible. Go right ahead, Jeff.
Okay, thanks, Brian. Hopefully everyone can hear me. This is Jeff Hurt. I'm a senior equity research analyst at ValueLine and a member of the options team. I'm going to try to answer some of your questions, which were either submitted before the webinar or asked live during today's session. James asks, what LEAP trading strategy can I use with your growth and dividend portfolio? So I believe he's referring to the model portfolios that we manage in the selection and opinion section of the ValueLine investment survey. One important thing to know off the bat is that when you invest in LEAP options, you do not collect dividends from the underlying stock, but you can use a strategy to sort of generate a virtual dividend for yourself. If you buy a LEAP call option, you gain leveraged upside to that stock over a long period of time. During that time, you can sell short-term out-of-the-money call options to generate income. These short-term options are likely to lose time value more quickly than a LEAP does, which is part of the benefit. If you want to participate in the dividends of the underlying stock, you could consider buying and holding the equity and then just writing covered calls on that position. If the covered call is in or near the money at expiration, then you can roll the call up and out, meaning to a higher strike price and a further out date. That way you collect the dividends from the stock as well as generate incoming premiums from writing calls. Thomas asks, if I pick a stock I want to purchase options on, how do I know which strike and expiration will provide the best results? Can you use this product without your other products? Yeah. To answer your second question first, yes, you can use the options survey by itself. You do not need to utilize any other product for this service or to use the screener. However, you can also use it with the ValueLine Investment Survey, or the VLIS as we call it. With the VLIS, you can find stocks that pique your interest, and then you can find the best options for those equities with the options survey. As far as picking a strike and an expiration, there's not always a clear-cut best, so it's not possible to say directly. That's something investors need to decide for themselves based on their risk appetite and goals. Using the screener, you can find highly ranked options to purchase, and that would be a great place to start. As far as the strikes, I'll also say as a general rule of thumb, don't look to go extremely in or out of the money because you will have a hard time finding a party to take the other side of the trade, and spreads may be wider. And for expiration dates, that can vary wildly depending on your strategy, but I would avoid buying very short dated options since if they are anywhere near the money, their time value will erode very quickly. Okay, Andrew asks us, do you recommend a minimum open interest or volume for options? For open interest, absolutely yes. Volume not as much because that denotes how much the particular option has been traded on that day. So early in the morning, you're not going to see a lot of volume yet. As long as there is some volume, that's probably good enough. For open interest, which for anyone that does not know is how many contracts of that option were open at the start of the day, I always like to make sure there's a number greater than 0 just for starters, and more is generally better. I almost never would choose to invest in an option with no open interest over a similar one that does have open interest. Higher numbers suggest that you'll be able to get in and, importantly, out of a trade with less friction, and spreads may be more favorable due to adequate market interest. In our screener, you can search for options with at least 25 or 100 or 1,000 open contracts, for example. And I personally tend to use a minimum of 25 or 100 for open interest when searching for options on multiple different tickers at once. It also depends on the magnitude of your trades. If you're trading big blocks of stocks or options, look for higher open interest. Nile asks, can you please explain what does delta mean? It's used in your weekly screen report. Yeah, sure. So briefly, delta is one of the Greek symbols used to discuss option pricing, and it's the most commonly referenced one. It's a measure of how quickly the option price will change given a $1 change in the underlying security. Delta can range between a negative 100 to a positive 100. I think it's easiest to think about this in terms of a call buy. Let's say there's a stock and it's priced at $300 per share. A 1-month option with a $300 strike has a bid price of $18 and a delta of 50 or 0.50 depending on convention. Same thing, same difference. That means if the stock price jumps $1 to $301, the option will gain 50 cents and be worth $18.50 instead of the original 18. Another interesting thing to keep in mind about delta is that it can be used as a sort of a proxy for how likely an option is to wind up in the money at expiration. So the 50 delta in the example I just mentioned implies that there is a roughly 50% chance that that call will expire in the money. Makes sense because that was an at-the-money call. A low delta of 20 means there's only 20% chance, while a high delta of 90 would imply that the call option is probably already very deep in the money and likely to remain in the money at expiration. The amount of time left on an option can also have a big impact on delta. Thinking about it logically, a far out of the money call that expires in a week will have a very low delta, but the exact same strike price much further out in time should have a higher delta, as it means there's more time for the price to fluctuate and therefore a better chance for it to wind up in the money. Okay. Julie asks, what is the best option strategy? Okay, so we've actually been asked this a few times. The answer is there isn't one, or it depends. Our screener and service primarily focuses on the basic options positions rather than complex multi-leg strategies. You can construct multi-leg positions using it, but it's best suited for finding one option at a time or for married puts and covered calls. The best option strategy depends on your objective, and that'll vary person to person. Do you have a basket of stocks you also want to be able to add additional current income to on top of any dividends? Okay, great. You're in luck because our service frequently discusses covered calls, which can do exactly that. Similarly, if you could write a cash covered puts, which also generates income and can allow you to enter a long stock position at a lower price than the prevailing market quote due to the premium you receive by writing the put. Or if you're bullish on a stock, you can use some risk capital to buy a call and gain leveraged upside potential. If you're bearish on a stock, you can buy a put. Some investors even buy out of the money puts on stocks that they own to provide a degree of insurance against a downturn in the equity. So risk mitigation or current income or leveraged upside, whatever the case, the screener can highlight some of the best options for any of these strategies. Ollie asks, call rights are ranked 5 for the best, but put rights are also 5 for the best, which doesn't make sense to me. Seems like it should be the opposite. If I am writing a naked call 5 that is not highly rated, that is not a highly rated stock, the price is likely to go down. So the call would expire worthless and you would collect all the premium. However, for puts, you would want to write puts where the stock is going up so the option expires worthless. Can someone explain that to me? Good question. You're partially correct. The logic for using rank 5 for both naked call and naked put rights is not that the stock price is expected to go down, but rather that the option price itself is expected to decline or is overvalued. On naked calls, this happens when a stock price goes down, as you said. However, for naked puts, the option value declines when the stock price moves up, all else being equal, ignoring potential changes in time value and implied volatility. Okay, so a rank 5 naked calls are often on overpriced options where the stock price may fall. Rank 5 naked puts are often on, once again, overpriced options where the stock price may rise. So in both cases, the value of the option is projected to likely decline. And if that holds true, the option writer would profit from selling the option at a certain value and either buying it back for less in the future or by letting it expire worthless. Okay, let's see if there's anything else. Okay, so I think that's all the time we have available for questions today. We hope that you've enjoyed this overview of the Value Line Options Strategist and are encouraged to sign up for the trial membership for either the options product or the Value Line Investment Survey. Anyone that joined the webinar today will receive a thank you email that has a link to a free trial. And for a free trial of the VLIS, please see our homepage. This webinar will be available in approximately 24 to 48 hours on our YouTube channel. Remember, if you have any specific options survey questions, or we could not get to any of your questions today, please send them to vloptions@valueline.com. Thank you and have a great day.